Hi guys, welcome back to another episode of ValeTalks by ValeTax. How are we all doing? Happy New Year, and I hope we did enjoy our 2025. And welcome to 2026, to a beautiful year, another beautiful season to hit the markets running, and most importantly, to make sure that we're doing things differently. And as always, we're going to have beautiful guests with us. Today we have Manesh Patel and we have Kaza Jamal. Manesh Patel is as a trader for a very long time, and Kaza also is the head of educator here at Valetax. And myself, of course, Innocent Brian Ifere. I am also a global market analyst and an educator as well, while Kaza is head of education and global market analyst. This year, we're going to be doing things a bit differently. I'm sure today you might be streaming from YouTube, or you might be streaming from Facebook, or you might have been streaming as well from the Zoom link. But either ways, welcome, welcome, welcome on board to 2026. Today, we're going to be talking about one of the most important things when it comes to the start of the new year. Okay. And we usually have a lot of people say things like, oh, new year, new me, trying to set new standards for themselves, wanting to do things differently. So it kind of has translated into the market. And now we hear people talk about things like new year, new strategy. And today, we're going to be exploring, is that the right way to go about it? Is that a good option? Is that a good choice? And if it's not, what would we be finding out today? That's why you're on the call. So stick to the end to find out. And we're also going to be sharing chart analysis and viewing the markets and giving you our opinions, our trade ideas as well, and why we're looking at those markets in the way we perceive them. So stay to the end to catch that part. Like I said, introducing at the start, today we have Manesh Patel. He's a global market strategist and educator, engineer, CMT and CFT trader with over 25 years of experience. As a matter of fact, last year made it 30 years. So thank you so much today for joining us, Manesh Patel.
Yeah, thank you. Happy New Year.
Happy New Year. And on the other side of the call today is Shifu Kaza. Kaza is global head of education at Valetax, is a veteran trader with over 11 years of trading experience and the author of Navigating the Economic World and also holds a doctorate in major economics. Thank you so much today for joining us, Kaza.
Thank you, Ryan, and Manesh, and you.
Thank you very much. So apparently, I just might be the youngest person on this call in terms of experience in the market, but my name is Innocent Ryan Ifere. I'm the senior market analyst for Africa region at Valetax and a global market analyst with over 5 years. Last year made it 6 years. And I'm the founder of Ryan FX Swing Trading Academy. So thank you guys for joining, and let's move right into it with no further ado. So our overview for today is going to be number one, the problem, why last year won't work, and why do people think they need a new strategy? Number two is the reframe. What does new strategy really mean? People talk about new strategy. What really is it? And then number three is going to be the decision. What changes this year? What exactly are we going to be changing? Is it the strategy or is it our mindset? What needs to be changed? And then on the fourth part, we want to see how to go ahead and win the year, because at the end of the day, it's all about coming out victorious, not just staying in the loop or in the cycle. So, new year, new strategy is where our conversation is going to start from. It's going to be very short conversations between I and the other speakers, so we could head into the chart for the day and view the market technically, fundamentally, and with a bit of sentiment, because as a trader, sentiment is very important for you. So, when new traders say new year, new strategy, is that even a thing? Or new year, not the same strategy, or not the same market needs new strategy. Okay, so I'm just going to move further on from here, and then we're going to discuss more on the reframe. Okay, Manesh and Kaza. So my idea of the reframe is what new strategy really means, and I put on this PowerPoint here. I said new strategy isn't more indicators, more trades, or more pairs, but better market context, clear execution rules, strict risk limits, and fewer high quality trades. So I just want to, pick, your basket and wealth of knowledge from the both of you. Do you really think that coming into the new year, what is required of persons or people is a new strategy? Or do you think is a new mindset? Or do you think there is even a need to put the word new into it? So I'll start with Manesh.
Okay, thank you. It's definitely a new mindset. One, you don't want to change your trading plan. The
Okay.
trading plan that you have that you've been executing year after year and year after year, you know with historical results how successful it is. So you really don't want to change the trading plan at all. You don't want to change your indicators at all. Your goal
Yeah.
is to have a new mindset going in. Because if you think about it, your goal is to follow the money. If you
Okay.
trade like an institution, follow the money, you're going to get a good reward with very little risk. So your reward risk is going to be high.
Yeah.
So a lot of institutions and some of the things that we did was when the new year starts, we look at what happened last year. We
Yeah.
looked at everything that was at the 52-week highs, everything that was a 52-week low.
Yeah.
Everything at the 52-week high, we're going to think this year it's going to start to come down because it has
Yeah.
limited reward now. If anything at the 52-week low, we look at it as bargain and we're going to be looking for buying opportunities in there. So we have a
Yeah.
contrary approach that we take on the institutional world. And that's what the goal of all the big money is that you want to make sure that you enter positions long term that give you good reward throughout the entire year.
Okay. Okay. Thank you very much. And Kaza, what would you say your opinion is?
Okay, for me, new year, new strategy. I don't think that new strategy is the key point here, because at the end of the day, when trader have been trading for more than 3 to 5 years,
Yeah.
they are always thinking when new year come, they want to change their tool of trading. But basically, uh, the main point is not changing indicators or tools of trading, but changing of behavior. Every year when people go to a new year, as a trader, they still have a same mindset. They still want to get rich fast. They still want to get. Uh, they still want to have a small capital and gain a lot of profit. So I
Yeah.
don't think it was the main point here, because at the end of the day, the core reality is the market do not change because of the calendar. By mean is the forex calendar that we are using.
Yeah.
Market change is because of the behavior in the market shift. So what is actually change? We see that the change is the speed of the price, the volume and participation, session dominant, and risk appetite in the market. So we see that this kind of thing is changing. So as a trader, you don't need to change to a new strategy. You just need to change your behavior. You need to change your position size, and you need to change your understanding and capital. Because when we see New Year, I hope that traders have a new mindset and a new goal that if I want to be a good trader, if I want to be a consistent traders, I
Yeah.
need to have a good capital. When you have a good capital, you will have a good position size, and you will follow the market dominance. So I think that is the reality of the new traders and new strategy this year for me.
Oh, okay. Okay. Thank you very, very much. I love how yourself and Manesh put it. Manesh, and what you've said just kind of synced together. I would say let me add a little bit of spice. Yeah, just a little bit of spice. I think the mistake that a lot of people make is the idea of strategy rings technical analysis to them. So when traders hear strategy, they're thinking Bollinger Bands, they're thinking RSI, they're thinking smart money trading styles. But strategy at the end of the day is any set of rules or stereo actions that you take to achieve something. So it doesn't necessarily have to be technical. It just requires you to do something different. So when you hear the term or when you think of the term as a trader, new year, new strategy, it wouldn't be about you changing your technical edge. It should be about how you approach the market. So you want to have better understanding of the market context, market conditions, what exactly is happening in the market. Volatility, for instance, on pairs like oil and gold is higher now. We've seen brokers start to talk about adjusting trading times, adjusting um trading volumes for this current pairs and all of those things. So you want to kind of have an understanding of what is happening in the market, then accustom yourself to the new thing. So that basically should be your idea of new year, new strategy. Thank you so much, Kaza and Manesh, for that input, and I hope mine as well was able to help them. So the problem here is why last year may not work, and this is where I think a lot of people do not know or probably haven't understood it yet, especially for the new traders. They think the market is just all around going through the same cycle every year. And when you have experts like Manesh that has been trading for over 25 years, he's seen it all. He's seen at least two financial crashes. He's seen he's seen big banks come and go. He's seen hedge funds fall and collapse. He's traded on Wall Street himself. So he would give us better, insight of really how the market operates. And that's just what I'm really looking forward to. Yeah. When I was thinking about the problem, especially when he talks about market conditions evolve and volatility and liquidity shifts in the market, like I put here. So these are some of the problems that people do not understand are always going to be engineering when it comes to the market. So I want you to kind of just shed light to tell people that every year doesn't work the same. You know, Companies have different targets every year. They have different thought processes. Hedge funds have different limits. They have, different mechanics that they are putting in place the following year. Economic situations affect them. So I just want you to kind of elaborate on that in just like a very simple, plain term that could help our beginner traders understand.
Kaza, you want to go first? Or me?
Yeah, you go first, Manish. You are the old, the old time traders. Please go first.
Great. You, remember one thing, you can't control the market. This
Yeah,
market's going to do whatever it wants. And as Ryan mentioned, everything every year is different. You have different countries doing different things, central banks are doing different things, mindset shifts, all kinds of global events will happen and stuff like that. Also, technology is evolving too. When I
yeah,
first started trading, you didn't see many online brokers. Today, now you have every retail person trading every global market to a point. Retail traders within themselves are a major force, whereas only institutions were before.
yeah,
So things keep on changing. But remember, the big money is thinking as a business. They have to report back to their investors. So they have to produce profit. Okay.
yeah,
And if something's gone up 100% last year, the probability of it going up 100% this year is very, very low. It'll keep on going up maybe the first part of the year, but sooner or later it'll start to equalize. Everything always equalizes. It's just a
yeah,
matter of when. And that's the thing I've realized with time in the markets that everything equalizes. As you mentioned, I've gone through many crashes in my lifetime. The biggest one was straight out of university, where in 2000 I rode the internet bubble up, then it crashed. Well, technology crashed. Then what happened is financial sector rotated in. So
yeah,
financial sectors led the markets up in the US and globally. When financials crashed, technology came back. So things kept on shifting and changing and rotations happened. So you have to keep on adjusting your mindset because the moment you don't, you think you're going to control the market. And at that
yeah.
point, you'll lose.
Thank you very much. Thank you, thank you, thank you very much. Kaza, do you have anything to add?
Yeah, thank you, Manish and Ryan. So, actually, let's talk about the real problem. Why what worked last year may not be working now.
Yeah,
So, a lot of traders assume that if a strategy worked before, it should continue to work in the same way year after year. And that
yeah,
assumption is where most of the trouble begins. The issue is not the strategy suddenly become bad. The issue is that the environment around it has changed. We have seen the change of the politic. The change of the scenario of the world. So we can say that the price may move differently. Volatility can expand or contract. and the market participation shift. So sometimes trend are cleaner and sometimes market are choppier. So, but traders often don't adjust how they trade. They always use the same lot size, the same frequency, and the same expectation. This is the main problem of our traders now.
Mm,
So what happened? Stock get hit more often, drawdown feel bigger, and confidence start to drop.
mm,
We always see that all of the traders that I've met before, they always use the same excuse. Oh, why when I trade last year, I make a profit with this kind of strategy, and I
yeah,
trade it now, I didn't make a profit because they doesn't see the market in a bigger picture. They always focus on the technical analysis, but they doesn't focus on the micro macro analysis. So that's why it's always important to understand both side of analysis, right?
yeah.
So instead of asking what changed in the market, always ask what wrong with our strategy. So in reality, it's a contact mismatch. So same approach, different behavior. So I think that's why last year execution may not work this year, even if the strategy itself is still valid. So yeah, I think that's from my side.
I feel like I would have had something to say if I had started talking when I asked the question, but Manesh said everything and you said everything. But I'm just going to kind of like add, something small to it, yeah. And I would say people should kind of view the market when they think of the time cycle that happens, like especially for day traders, yeah. We have like the Asian session, we have the London session, we have the New York, and we have the Sydney session, yeah. And sometimes I like to add the Frankfurt session because I feel like that's where most of the manipulation happens. But when you kind of view the market in that light, you understand that every session has a different level of liquidity. It has a different level of gameplay. So you need to view the market holistically in the same nature and in the same light. Yeah. The market isn't the same thing all year round. First quarter usually brings in a lot of stabilization. Second quarter is where main business starts. Third quarter is where Third quarter is usually where the market starts to range a bit. And then towards the end of the fourth quarter, we tend to see some sort of impulses, volatility, businesses trying to close their transactions, get done for the year. So the same thing wouldn't happen the same year. And sometimes it all depends on how the previous year closed. And that's why Manesh made mention of something at the start of the call. He said, now we've seen prices get to the 52-year high or the 52 weeks year high or the 52 weeks low, depending on what direction the market was at the start of the year. So now institutions are going to be deciding where they want to go to. Are we going up? Is there more opportunities for us to keep going bullish, or do we need to retrace now and start to go bearish? So it's all about knowing this at the back of your mind that the market isn't static. The fact that it's moving and it's flowing like water means there are times where it's going to get wavy, there are times where it's going to be a smooth sail, and there are times where it's just going to have to overrun into another water body, and we need to adjust ourselves to watch for what is going to happen next. So your strategy last year might need a little bit of, touch. Doesn't necessarily mean it's not working. It's just conditions. Okay. So what decision are we changing this year? And this were my top three. Yeah, that I personally asked myself at the start of the year. What do I need to stop doing? What will I refine? Not replace. What rule will I never break again? Because sometimes I realize the problems people have is not with the strategy, it's really about themselves. It's really about you as the trader, not the strategy. Because you could have a perfectly good strategy. I mean, a lot of traders out there, a lot of mentors are teaching their strategies to students, and these students still end up not being successful or not being profitable. I usually don't like to use the word successful because I sometimes think like success is subjective, yeah. But they end up not being able to pull it off just like their mentor. And it's not because the strategy doesn't work, it's because the person isn't working in alignment with the strategy. So sometimes you need to identify is it you problem or is it market condition problem? So it all boils down to awareness for me. So these are the three questions that I think everyone who is aware should then ask themselves. What do I need to stop with? What will I refine and not replace? And what rule will I never break? If you're a smaller time frame trader, stick to a smaller time frame and make sure you understand it well. If you're a higher time frame trader, refine your edge, don't replace it, but also try to balance your refinement with, you know, what the market conditions are. Because if the market conditions are, you know, giving us a lot of pullbacks, less impulsive moves, shorter impulsive move, deeper pullbacks. You need to understand them and you need to match what is happening. So these are my top three questions that each and everyone on this call needs to ask themselves this year before you start running into February. So take January off and refresh, refocus, and realign yourself. Okay. And these are the three takeaways, but we're going to come back to this before we get back to the takeaways. And I just want I myself, Manesh and Kaza to kind of play around the year at the start of the year to give you guys like an insight, some sort of market teaser on what we have been looking at individually ahead of the year, also putting into consideration current market conditions, technically and fundamentally. We see a lot of socioeconomic happenings right now. We see a lot of technological advancements. Yeah. And Manesh himself is an expert when it comes to AI trading, machine language, and also technological development in other spaces besides just the conventional finance. We see him also reaching out to the modern finance and the development of AI, crypto, and all that. And we also have Kaza here, who is also a very big expert when it comes to economics and world economics, especially. And myself, who is a very big enthusiast of fundamentals as well. So we're just going to kind of give you guys a run through on certain assets that we're looking at. So we've picked up three major assets. We're looking at gold, which of course has been on, as far as I'm concerned, gold might get to the moon before Elon. But yeah, hopefully it doesn't. Then we're also going to be looking at the crypto space with Bitcoin, and we're also going to be looking at the natural gas and resources asset center with oil, crude oil as well. So I'm just going to let Manesh go. Okay, I think Kaza should go first because I think gold is like a very big pinpoint for a lot of persons. So please, Kaza, go ahead and share what your ideas are on XAUSD moving on for the year.
Okay, so let me share my screen first.
Okay.
Okay, so can you see my screen now?
Yeah, yeah, I can.
Yep. Yep.
You see it, right? Okay,
Yes.
so basically, if you see now, gold from months to months since last year, it became the most sensational pair among all pairs, right? It
Yeah,
become all-time high from months to months to months. So I always said, traders say, oh, it will become all-time high and will go down after this, but it keep rising, rising, and rising, right? So
yeah,
if you see here, let we talk about the technical side first. We are in the area of the psychological area in 4,600, right? So it's been already surpassed that, and it stays around the 4,612 now. When I see it here, it's already break the psychological area, and I see that my Bollinger Band is on the uprise or the continuation buy trend. I always I always see it as an upcoming higher high. So why
mm,
is that? When I see it in technical, it will become a more higher high. In my prediction, guys, for this year itself, I can say that the gold will go as far as 5,000 US dollar per
mm,
ounce. Why is that? First we look at the technical side. Of course, we doesn't see because it's already the highest highs since 10 years or 12 years ago. But in the economic side, We already see what have president of the U.S. Donald Trump has been made from time to time, month to month. First of all, uh, as we see the last 1 or 2 weeks, the issue with the Venezuelan country, they already captured the Maduro, right? So it became a tension in the economic world, and they see the investors see that it might be the right time now to sell the US dollar and buy gold. So because as far as you will know that gold is a safe haven currency as per right now. So the reason why I'm focusing gold is on buy is first of all in technically you will see it directly in a bullish momentum, and if you learn with ideas or with theory, I could say right now the market is doing the what we call as a corrective momentum before doing a impulsive momentum. The corrective momentum is being completed for at least um, right now is for today is complete now, and I'm getting a hint here that the market will go down in the area of the psychological around 4582.7 before it continued its impulsive pattern. So the other thing is the US dollar have been softened because of the headline that has been coming out a few I think this week of the criminal globe criminal probe regarding the um, US Federal Reserve Jeremy Powell. So it might be become the main reason why gold will keep rising this week. So I guess guys, I will be looking gold to buy more and more in a coming week. So yeah, that's my insight for gold. Maybe I give it back to Ryan to take the mic.
Okay, okay. Thank you very much for that insight on gold, because I personally have been having some some view too on gold. I believe during the my market outlook for the week on XAUUSD, I had also explained that I was expecting bullish momentum. I mean, short term, of course, for the period of this week. And just right before we got into London session, I could see gold creating new all-time highs, taking out the previous liquidity resting above that all-time high. So I was expecting that too as well. But before I head into because I would want to share, insights on crude oil, I would want to allow Manesh, okay, to give us insight on the US economy development further and how it's going to be affecting Bitcoin prices and what he's expecting for Bitcoin prices this year.
Okay. Can you guys see my screen?
Yeah.
Clearly.
Okay, so I'm showing Bitcoin here on the weekly time frame. I just changed the bars here, and all we're doing is this is a simple price action scenario here that we're looking for the current bar to close above the previous week high or low of the bar. If it does, then it colors the bar and that's it. This is something that we've done in the Valetax educational series, where we're teaching people how to do real bars and fake bars and see the games. So let me take one step back. As we mentioned, with the new year, we're having a different mindset. Okay. And remember, our goal is to think long term, not short term. Okay. So everything that was at a high last year, we're looking at it still keep on going up, but on a short term basis. So if we're trading things that are at 52-week high, short term basis, we're going to be trading daily time frame or lower, not weekly, not long term. Okay. And then what we're doing is we're looking at things that were took a hit last year, and looking for opportunities to get into them in a buying side. Bitcoin was a perfect example last year. If you look at Bitcoin's history, it's only gone down 2 years. And basically, there were 2018, it went down, and 2022, it went down. Every other year, every year since then, it's closed out bullish for the year. So last year, Bitcoin basically was bearish. Okay. So this is a great opportunity for us this year. Okay. So now we're looking at Bitcoin. It's on our radar for a buying opportunity long term. So we're looking for opportunities on the charts to tell us, okay, now the big money's coming in and looking to buy. And all we're doing is looking at the scenarios now on a weekly time frame where we're looking for a bar to close above the previous week high, looking for that to happen 2 weeks in a row. Last, not last week, the week before, the beginning of the year, we finally had buyers coming in Bitcoin here, and it closed above previous week high. That was a great start. Okay. That was a buying opportunity here. Now we're looking for a follow through. So last week, we were actually looking to go long on Bitcoin for the entire year. But we needed this bar here last week to close above the previous week high, and it didn't. So at that point now, it's still not ready to go. We're going to be keep on looking throughout the year of Bitcoin bottoming out and at that point going up. So this is an opportunity here where last year was negative, but this year we're looking for it to go up and capture the rewards there. So we're just looking for the timing element on the charts, specifically the weekly time frame, since we're looking long term. And we're just looking for 2 weeks in a row where it closes above the previous week high. And at that point, we could sit there and safely say there's high probability the bottom for Bitcoin is being in for the year. And now it has the upside potential of at least moving 10, 20%, or 30% before the end of the year. So this is a great idea of a long-term play that we're looking at based on what happened last year and going forward. So, if last week um, Bitcoin actually had closed above uh, the previous week high on social media, I would have put in everywhere out there that there's high probability Bitcoin has reached the bottom for the entire year and now could be bullish. But until it does, this is in a bearish consolidation state, which is currently in right now. So we're looking for the bottom there for Bitcoin.
Okay.
Okay.
Thank thank you very much, man. So I just kind of have a question, yeah,
Okay.
about Bitcoin. Do you think there currently any, do you think there currently any developments surrounding the crypto space that could be responsible for either, probably seeing the Bitcoin go short, or we start to actually see potential long sides for the BTC?
So that question kind of is probably a little more fundamental based, I guess. Okay.
Yeah,
If you look at I'm not a fundamental trader at all, but I
yeah,
do look at history and stuff like that. If you
yeah.
look at the history of Bitcoin, every time it's made a big long move, it's due to a global event.
Okay.
One of them was China getting very strict with a lot of people in their country,
Mm,
people moving out of their
yeah,
country, and stuff like that. The stuff with Venezuela uh, could cause not just Venezuela, but other countries too, with
yeah,
Iran and everything, now could cause a lot of shifting of money. And what's happening now is the shifting of money, a lot of people will do in forms of Bitcoin. So they'll take their local currency, turn it into Bitcoin, transfer it to another country and stuff like that. When you start seeing mass scenarios like that, then you know it's going to go up, and it'll go up for a little
mm,
while because the countries are in turmoil for a couple of months and so forth. Now, eventually they'll go to their country and they'll sell it back to the local cur- uh, currency there, and then you'll see a pullback or a trend reverse on Bitcoin. But typically, a global event will cause that, um, flee to safety type of scenarios. Before,
mm,
a lot of people were flooding to gold only, but now with the global markets and everything and knowledge with technology, you're starting to
yeah,
see a lot more shift into Bitcoin. But we're kind of, we're not looking at it from a fundamental perspective. We're
yeah,
looking at it from the charting perspective, technical, and looking for big money to come in. And
yeah,
even though the Venezuela situation has happened, everything in Venezuela has been going on to a point. A lot of the big money in Venezuela is already left. right? The only people that have big money in Venezuela now are the government officials. And,
Yeah,
you know, if the civil war develops, which is slowly happening now, then you can start seeing that big shift of crypto in Venezuela to move money out and so forth. And crypto is huge in Venezuela. So you could see
very
that
true.
going on. And I think this big price movement here was a lot of things going on
Yeah.
with Venezuela.
Very, very, very true. Very apt, especially considering the fact that the Venezuelan government also have a very big reserve of crypto and
Yes.
even Bitcoin as well. Because I had the US government wanting to take over the Venezuelan Bitcoin reserve as well. So that would create a lot of shift in the market. And considering the fact that you mentioned Venezuela, my outlook, okay, currently is relative to what's happening in the Venezuelan government and around the the market and the economic space in general. I have been, doing a bit of study and research, and I'm kind of seeing that the world is gradually shifting to a point where there's a struggle for resources. And I think that's one of the major causes and the move for the US, capture of the Venezuelan. I mean, it could be, you could consider it conspiracy, but I mean, conspiracies are actually just truths without a gateway to come out. Yeah. But yeah, I believe it's just a struggle for resources. All the wars we're seeing, the economic crisis, and all of those things. If you look at them clearly, you see some sort of strategic positioning to a certain resources in these countries. So Venezuela has a good bank of oil reserve as well, but I feel it's kind of a distraction because they have more than just oil.
No,
if
yeah,
we're go if
definitely.
we're going to be talking about they have more than just oil. And with the rise of with the rise of tech and the AI bubble at the moment, we see a lot of need for energy. Now, I'm not saying oil is directly proportionate to the amount of energy that is going to be needed, okay, when it comes to the building of data centers and research centers for AI and all of those things, yeah. But we see that if a lot of this energy, nuclear energy and all these other sorts are going to be really focusing on building big facilities for data, then we're going to start to see, I think, the world gradually come back into the need and the desire for oil at some point. It might not happen immediately, but at some point, there's going to be a demand for oil. Now, with everything happening and the crisis happening, I believe that there's going to be an excess supply. I mean, even CMEX have also made mention to state things like they're also expecting to see an oversupply of oil in the coming year, which is 2026. And we can clearly see that on the charts. Just to confirm, can we see my charts?
Okay, I just
Uh,
stopped sharing, so you should be able to share. Okay, there
oh,
we go.
okay. Yeah. So you see the oil prices have been on the downside after the COVID crash. We saw oil hit. This is the UK oil, by the way. Let's start from the US oil. We see the US oil hit the highs of about 120, $130 per barrel of oil. And ever since 2022, we've been on the down. We've been bearish for oil. The supply has just been a whole lot with no sufficient demand. And I believe in order for this, demand to be built up, a lot of things would have to shift fundamentally. I believe Kaza would agree with me, considering the fact that we always see a major event come into alignment with the footprint, which is the chart. And looking at my chart, what I noticed is we see that the crash of 2020 led to a shift in structure on the monthly time frame for oil. So we see that shift here where we came out of this bearishness and we finally took out the last bearish structural high year on year, long term from 2018, and we actually went bullish out of it. Now, I believe that prices for oil will continue to stay bearish due to the excess supply until the very time where that demand is going to come in, when there's going to be a very scarce need and necessity for oil back into world civilizations, and we're going to start to see that demand come in. My particular target is for the US oil and the UK oil to stay bearish back until about 35. per barrel of oil before we start to see that massive demand coming. So long term, I'm going to be looking to see a continuation of the shorts. I mean, short term, we might see some sort of bullish corrections due to one or two news and all of those things that would usually move the market. Probably just to take out technical liquidity line just right above the $60 per barrel if possible. If we continue to see oil prices stay above 55, 58, 60, then we'll possibly get that push for oil back into this region of $64 per barrel before a continuation of the sells. Technically, this is my view for the US oil. I've had this analysis since about last year, towards the end of last year. So we just might see that clean break out of this falling wedge back, tap into this area of supply again. This is where the most supply technically is resting, and then we'll continue to get that those sales for the US oil. So same thing when you look at the UK oil chart, you'd see almost the same thing. Yeah, you see we have this huge imbalance here that was left at this level here, and then we see lots of sells to the downside. But we can clearly tell that the sells here are not as a result of any major move in the market. The last major move for oil in the market was during the um this was during the what war was that affected the coast of the Persian Gulf. There was when Israel was attacking Iran
I
during
think it was,
the Israel Palestine
yeah,
crisis that happened. Yeah, that was the last time we saw oil do a very impulsive move, a very strong move that we could tell that this was as a result of market uncertainty. The sales happened and then the buys happened. But ever since then, we've seen small money and retail traders trying to constantly move prices, and all of this can simply be identified as liquidity due to my own style and system of trading. I identify this as liquidity. The market has really been choppy. So this is just like an accumulation of liquidity in the market. And I'm waiting to see that impulsive move that actually goes to take out this liquidity for supply to finally come back into the market again for more sales. Considering the fact that we already see banks, already speculating and building sentiment around more supply for oil. Right now, we see the supply of oil about zero point 0.7 to 1.2 million barrel per day, and it is actually more than required. So we're going to be seeing a lot of excess supply with no demand for the meantime. So that is my fundamental backing that backs my technical view for oil.
yeah.
So,
In fact, Ryan, this week is very critical for us, and that
mhm,
if we close above last week's high, I think you're going to get to your level very fast,
yeah,
at the top. So this week is very, very critical for us on crude oil from the technical charts.
yeah, we can
So if
see
we
this
close above that,
huge,
yeah,
yeah, this huge weekly candle here.
yeah. So if we
This,
close above last week's high, then at that point we're going to be calling a short-term bottom on crude oil and start giving out bullish targets.
yeah, yeah. So that exactly is my plan. I'm so glad that you say it as well. Now you've given me more confidence and confidence. All of a sudden, starting to feel like I've been trading for like 20 years.
You have virtually.
Yeah. So with that being said, Kazi, do you have anything to add?
Um, I'm, I don't have anything to add right now because for me, I never studied about the U.S. oil
Yeah.
market, so I cannot say much because if I say I don't want to say something wrong. But if you ask me about gold now, we will see a much bigger momentum in the next
Yeah.
second quarter, so
Yeah.
that in the next second quarter, we will see that the market will have a bearish momentum for a while, and
Okay.
then we will see a continuation of bullish.
No,
So
okay.
I hope that yeah, the gold trader must be prepared on that. Even though you are a swinger or a short-term traders, you must be aware about gold momentum because XAUSD is a crazy, crazy pair. So you must be aware of that as a trader.
No, okay. Thank you so much, Kaza. Thank you so much, Manesh, for your
Yeah.
views and
One
insight.
little comment I'd like to make on
Yeah,
Venezuela oil. A lot of
yeah,
people are thinking trading oil based on Venezuela. You
yeah,
got to be very careful, as we said. You got to look at the
yeah,
charts, right?
yeah,
I could tell you this for a fact. Reason why is I actually own apartments in Maracaibo, the city where they do the oil production. And a lot of people think the oil production has stopped. No, it hasn't. It's still going on.
yeah,
So, you know, don't let the Venezuela news affect your trading. Look
yeah,
at the charts and see what really is going on instead
yeah.
of listening into all the hype on Venezuela and what it's going to do, the
Exactly.
oil supplies and stuff like that. That's the
I
only
mean,
comment I'd like to make.
yeah, and that's very true because a lot of people just, at the end of the day, yeah, people would always tell you to what's the word? I think there's a popular saying of trading the rumor and
Yeah,
something like that. But the truth about it is, when we even talk about oil and Venezuela, there are about four other countries that have bigger reserves than Venezuela themselves. So they don't even control up to 12 or 15% of the total oil reserves in the world. They don't even have that much, you know. So when we're talking oil, we're just basically going to be talking about, overall in general, like I mentioned, it's just fundamentals surrounding the supply of oil. A lot of people are not really using oil as the only sustainable form of energy any longer. We have nuclear energy, we have people using waste fossils for energy now. We have clean energy, people who are using like wind vanes, solars, and all of these things, and that's what is currently in vogue now. So the supply of oil is dropping, unlike before. I think only third world countries really are still sustaining energy production via oil, and even motor vehicles. A lot of countries are going green. We're seeing a lot of EVs and all of these things. So that's one of the major reasons why I am short on oil, because the supply isn't as much as before. Venezuelan case is just going to make noise in the market, retail noise. But like you said at
yeah,
the start of the call, trading this year is about following the big money. You need to know where they're going. You need to know why they're going that direction. I hope people on this call really, really are taking notes from everything that we've all said, because I feel like if they're on this call and if taking notes, we've set the tone for the year. You could literally just stay on gold,
yep,
oil, and Bitcoin for the whole of the year, and you probably would just keep making yourself a lot of money, you know, in long-term perspective. So that being said, here are our three takeaways for this episode, which is season two. And welcome to season two if you're just joining the live again. Please feel free to come back to watch the live if you missed it from the beginning. And don't forget to also pay attention to our YouTube channel and turn on post notifications for the YouTube channel. So every time we're going live or we have an event, you're notified as well for the next episode. So our three major takeaways would be: New Year doesn't change results, structure does. Your mindset, your structure, your rule plan, and all of those things are one of the things that make your new year what it's supposed to be. Number two is a better strategy is refinement, not addition. You don't have to change what already showed you evidence to work. Okay, it's showing you that this can work if you have a strategy right now. And when I mean strategy, I mean both your technical edge and whatever rules you have in your game plan. If you've built a strategy that works and probably gives you a 5 win out of 10, it means it works. You just need to refine to get better. And sometimes it's not about how many trades you lose or how many you make. At the end of the day, if a strategy can give you result, it means it's workable. So sometimes what you need to do is adjust your input in the market. What I mean by input, I mean your position sizing, your lot sizes, and how much you're willing to risk. A better risk to reward ratio would give you better results on even lesser wins, because you could get 3 wins out of 10 with a good risk to reward ratio. You'd still be profitable. Okay, so refinement, not addition. And number three is discipline is the real edge. So don't try to be indisciplined and then blame the market. I believe I shot a reel about that just last week where I made mention of that. A lot of people are quick to blame the market, but sometimes it's not the market, it's your dirty habit of wanting to chase every trade. So you need to stay disciplined in the market, and that would be your major concern this year. I believe we all agree to that. Do we?
Definitely, definitely.
Okay.
Always.
So, yeah. So moving forward, how do we win for the year? And this is a question and discussion part of this live. So questions can come in now. If you have questions, please drop them in the chat on YouTube, or also drop them in the chat on our Facebook if you're streaming from Facebook, wherever you're streaming from, be it TikTok, YouTube, Facebook, or on Zoom. Just feel free to please leave your questions while we're having the short discussion before the end of the call. Um, Manesh, what would you say is something you would be doing and the public watching this live right now could actually, you know, take from you as well, or should I say your
No,
shadow? What would you be doing differently this year to win better this year than you did last year?
so one of the things, if you want to keep on improving as a trader, exactly what Ryan said at the beginning, Kaza, everything. This is a perfect workshop right now, at the beginning of the new year. At the end of the year, I always evaluate two things as a trader, and these evaluations are to keep on improving as myself. One is to look at my system overall. How did the results do and everything? This is where I didn't interfere with it. See if you need to make any little tweaks or anything like that. Two is the big one is the psychological part. Where did I make mistakes? You're human. Everyone's going to make mistakes. It doesn't matter how many years of experience you have, 20, 30, or all that. You're still going to make mistakes because you're human. The key is that you recognize the mistakes and set up habits to avoid them. So the habits going into this year are the most critical ones. So you have to recognize all the mistakes that you made last year. You have to be humble to do that. Take that list and then figure out what do I need to change in my work environment, my habits, in order to progress forward this year and not make those same mistakes. Because we're going to make mistakes. It's just a matter of how do you minimize them. A perfect example I always tell my students is, okay, you have your trading system and everything. Your prep work before you look at charts is very, very critical. They should take 3 or 4 charts that they won. The setup was good. This fits their trading plan. Print them out, laminate them. And before you look at any charts, look at those charts. Look at those setups, those trades that you took, the ideal ones. So what happens is before you look at any charts, you know what a good setup is. You know what the setup you're looking for. And then when you look at charts, it'll help you recognize things. So those are little habits that uh, I've had to do for myself and so forth. So even with the 30 years of experience, I still have 20, 30 minutes of habits I do before I even open up a chart. I'll listen to music to relax. I'll look at good chart setups that are laminated and stuff like that. And those are little habits that I've created where I don't go to making mistakes and this and that. So my
Mm.
biggest thing is exactly what you said. You've got to take time at the end of the year, recognize your mistakes from a psychological point of view and everything, and set up habits to avoid them going into next year. That way you
Thank,
improve as a trader year after year after year.
thank you. Thank you so very much, Manesh, for that. I think that's also something I would do. Starting up, I used to have a very good habit of having to listen to music, cool down. I think I still do, but it's just going from having to be a day trader chasing the market every day to finally being, like swing trading and all of those things. One of the things I do is I usually take Mondays because have a lot of tasks to cover up during the weekends. Yeah. So Mondays I usually do something towards the evening time where I just take like a very cold shower, have coffee, I dim the light in my workstation, and then I listen to lo-fi music. yeah, and I just chat. It just helps me open up, my mind. I see things differently because at that time I'm not looking for a trade. I think that's one mistake that people need to correct. The best time to look at the market is not when you're actively searching for a trade, because when you're actively searching for a trade, what your mind is reading is looking for immediate opportunities, short term. So when you want to view the market when your mind is away from just wanting to make money to wanting to understand. But then you can use that to make money later on. So that's just something I would advise people to do differently, and something I would also be doing differently myself this year as well to stay consistent with it. Kaza, how about you?
Yeah, Ryan and Manish, thank you. First of all, I'm so sorry because I'm still not feeling well, so my mind is quite dizzy now. But for me, this is my 12 years in the market. I never change the way I look at the market. I always start trading in March, and I will stop trading before November.
Yeah.
So until now, I'm not yet started trading. I will wait until March, but I will always look at the market just to see how the market is going and everything. But for me, it's just short and simple. Two things that I always do is one is focus, two is
Mm-hmm.
discipline. Number two is
Mm-hmm.
discipline. Focus in whatever that you want to do, right? Focus on one trading technique,
Mm-hmm.
focus in one understanding. Because I don't know in other country, but in Southeast Asian, we always sees that a lot of traders they always have a lot of trading technique, yeah.
Yeah.
When you open up their meta traders or trading views, you will see a lot of indicators. And nowadays 2026 and 3 years back we'll see the AI bubble, like Ryan said, and they always rely on things that do not have a mind like a human being, right? Even though we call AI as the most clever system that has been built by a human, but it's still not human. People always rely on that. That is the problem. So for me, I always, since the first year I started trading until now, I'm still using the same indicators. I'm still using the same understanding. What changed this year is, for me myself, I want to be more on focusing on my position size, because the problem with me from years behind is, even though I have a 1,000 or $2,000 account, I always want to keep put my position as much as I can until, in MT5 we will see the not enough money indicators, right? So
Yeah.
I want to for me this year I want to change my position size so that I will be more calm, more relaxed, because um, when years 2026 come to myself, I felt that I must be more calmer, more
Yeah.
relaxed, and to be a really good mentor for everyone that are still learning with me, so
Yeah.
yeah. And the second thing is discipline in whatever that you are doing. Even though as a human being, I want to be disciplined on timely manners. So sometime, Ryan and Manesh, I always trade gold only at night. So in Malaysia, gold or US session active at around 8 p.m. until 11 p.m. Malaysian
PM.
time.
Yeah.
So yeah, PM. So it, I always stay up late just because I want to trade gold at that time. But you see that the market is always moved from 7 a.m. until the 5 p.m. 5 a.m. Every day. So from this day onward, I always say to myself that I want to trade early, so that I can get sleep early, so my mind and my health is
In
good
check.
this year because yeah, and check, So yeah, that's from my side.
Well, thank you so much, and I respect the fact that you want to focus on your health, because I mean,
Y-
to what gain is it if we make all the money and we don't have the health to follow it? You know,
Yeah, no
Yeah.
use, no use,
no use.
because
So
until now I'm still sick. If I have a lot of money, it's no use, man. Yes, manage.
exactly.
But Ryan, I'm not sure. There was a question that came in.
Yeah,
Um, okay. You want me to read it
I
out or you got it?
yeah, I think I just saw the question. It says
Okay.
was it the one on sentiment on oil?
Yep. Yep.
Yeah, the question read, the sentiment on oil, how will the Venezuelan scenario affect the market? Lastly, the EV situation in Africa. I doubt oil-reliant countries will make policies that leads to mass adoption. Well, I personally would say this person's question literally answers his question in the question, yeah. I mean, if the person is to view it in a more sentimental way, considering the fact that he already has a doubt, means that he has some sort of information about it. So first thing I'm going to say is the Venezuela situation. Yeah, the Venezuela situation isn't going to have much of a humongous effect on the oil market. It's just going to be based off retail speculations and impulses. Because retail traders, we like to think that we know, so much. So when you hear oil, you hear Venezuela, you hear crisis, the panic. At the end of the day, retail traders, we trade panic a lot. So the market is going to be reacting to the panic, but it's not going to set a long-term direction for the market in any way. It's just, it's like having a bucket and you take a handful of water. That's what Venezuela is. Yeah, if it was something that was happening largely in the Middle East, because we know the Middle East has one of the biggest banks and reserves of oil, then we would be scared. Yeah, but it's just Venezuela, and I believe, like I and Manesh popularly agreed on, it's not really oil concerned. There's a whole lot of story to talk about the Venezuela government and crisis. Yeah, and then for when we look at if Africa would he said the EV situation in Africa. Obviously, it's business. There's no oil reliant country that is going to push for massive adoption of EV. Because when we look at Africa and third world countries that have a good bank and reserve for oil, their major source of revenue and income and wealth generation is an oil. So when you have a lot of sharks in the oil business, they wouldn't really allow for an adoption of EVs in that geo sovereign zone. So there would most likely be a slow on it. But at the end of the day, if that country is reliant heavily on oil, then it's constantly going to try and push oil because that's where it's most of its business and its revenue comes from. But then there's another side I would want the person to look at it from. Yeah, is we also need to understand that at the end of the day, the reason why there are going to be people relying on oil and people not relying on oil is that's what brings the balance. It has to be a win and lose situation. So the reason why oil prices are not just tanking and dropping everything is because there are people still relying on the oil. So there's just enough demand for oil to hold it, but it's not meeting up the supply, hence why the market is bearish. But if we had a very active demand that was more than supply, then we'd be getting more buyers into the market. So that's just why the chart looks bearish. And I hope that helps you see the chart more technically from my explanation. So if we have no further questions, I guess I want to say a very big thank you. Very big thank you to Valetax for being the overall host of this podcast. And I hope everyone watching this podcast have enjoyed the podcast so far. And thank you, Manesh. Thank you, Kaza. Thank you so much for sparing time to attend the podcast today, especially for Kaza, because I know it's about, would I say your bedtime? But let me not say bedtime. But,
Yeah,
but yeah.
it's still good for me, but yeah, if you are feeling unwell, you are not focused on anything, man.
Yeah.
So yeah, Please
Yeah,
pray for me, man.
yeah, you're in our prayers, man. You're in our prayers. Please do get well soon as well. Thank you so much, Manesh, for making an early morning show up because I know you showed up about 7:30 8
Yeah.
your time. So thank you so much through your busy day and the year is just starting. So I know you have a lot of things to do. And thank you to our viewers out there who are watching from far and wide. Thank you so much for tuning in. I hope by the next episode you invite your friends over, share the link to your communities as well, and hopefully by next week we'll also be having one or two extra guests join us so that we could continue having beautiful discussions and conversations like this. But until next time, I'm glad to be your host as always, and thank you to my guest for today. We'll see you guys on the next episode of ValeTalks. Bye, guys.
Thank you.